Hi everyone. Welcome to this session of LTR here in FX Street. This is us from FX Instructor. Now, we've had a busy data-driven day. Okay, it's been a very busy day for us. Earlier in the trading day, we saw GDP numbers coming out of Australia. Now, people were really caught off guard by the way market responded. Normally you have your Australian GDP numbers and people would just go textbook. If they come out bad, you start selling your Aussie. If they come out good, you start buying the Aussie. But we did not get a textbook response out of that GDP from Australia earlier. We had weak numbers, negative 1.2%, and yet our Aussie actually rallied. So before we go on to what's going on right now, let me just review what happened then. A lot of people were confused. Why was this happening? I think part of this really was if you look at how your Aussie behaved yesterday. Yesterday, Asian session, I saw that the median forecast for Australian GDP was minus 0.3. By the time European session kicked in, that consensus forecast was revised down to minus 0.9. By the time New York session started, it was minus 1%. And then Asian session, Bloomberg was saying that the consensus forecast was minus 1.1. So throughout yesterday, people were already shorting the Aussie in anticipation of a bad number. Throughout yesterday, the GDP forecast for Australia was revised lower and lower and lower. So you've had an element of buy the rumors of the fact. The rumor being market data will be bad. So instead of waiting to respond to it, they bought the rumor. They reacted to the expected data, and market sold off the Aussie. So much so that when we actually saw our numbers, negative 1.2, we saw a rally. Other considerations. The decline in Australian GDP is not because the economy was slowing down. It was because of one-time event. Meaning, well, you remember the flooding that we had in Queensland in March? Basically, that was it. Because of that flooding, some of the exports from that mining area were halted. There was some infrastructure damage. But if you look at the details of the numbers, we would point out that over the last few months, your capital outlay, capital expenditure from the Queensland area has been rising. So what are we saying? We're saying that as far as the numbers were concerned, as far as Australia is concerned, that negative 1.2 read in GDP is a one-time event, and going forward, we should expect a bounce in Australian GDP. But that was then, and we've already seen markets' response to the idea of a strong recovery in Australia's economy for Q2. So what can we do going forward? Let's talk about more recent releases. A few hours back, we saw PMI data from the Eurozone. We saw PMI CIPS manufacturing index from the UK. What happened? CIPS manufacturing in the UK came out very weak, 52.1. Consensus was 54.3. It's still expansionary, but it fell short of consensus. At the same time, your Eurozone PMI for manufacturing came out 54.6 against 54.8. So again, weaker than expected. as a result of this, we now find European equities unable to push higher. In fact, European equity indices are in negative territory. That suggests we should be thinking in terms of risk-averse markets. That suggests we should be thinking about a weaker euro, a weaker GU from here. So let's move to our euros, our GUs, and see what exactly can we do for these charts. Let me start with euro, unless of course you guys have some other chart you'd like us to look into. For the euro, when we look at it from the more limited range for today, average daily range for euros about 120 pips. We have about how many pips of price action? Highs at 44.47, lows at 44.84. So we've seen about 70 pips of price action only in euro. So limit. What else are we getting? We find ourselves just below the 50 fib retracement of the sell-off in the previous month. We find ourselves with an overbought stochastic, a rising MACD, an inability to push along with poor data. So, find ourselves looking for an excuse for weakness. Now, I realize that we've been rallying in euro over the last few days. Other events, other releases. There's growing talk that the IMF will not be releasing its latest tranche of aid for Greece. At the same time, this actually came out of a German newspaper. That same German newspaper also suggested that maybe Germany will be coming to the rescue if IMF does not provide its latest tranche of aid payments. So what are we saying here? A lot of uncertainties are hounding the euro once more. Okay, so combine good resistances, a big rally over the last few days with uncertainties, and we're thinking maybe it's time to consider a pullback. So you're overbought, you're bullish in MACDs in the dailies, but look at the lower time frames and what are we getting? From the 4-hour chart, we have a bearish divergence in stochastic. We are topping off in the MACD. We have had a series of spinning tops from the candles. Those spinning tops suggest lost bullish momentum. Your bearish divergence in stochastic suggests, again, you're losing strength in your rally. You're topping off in MACD. When you look at the hourlies here, I would note that we've actually seen a break of a minor support in euro. That to me suggests consider further losses. Consider euro easing off towards a strong support area, towards the 43.40 threshold. So bearish looking in the 4-hour, topping off in your 4-hour MACD, lost momentum from your candles. Immediate need here would be to test your 43.63 support level, push below it and see what happens with a strong support at 43.40. How are we doing in the hourly charts? Are we suggesting that this is a bear market? Well guys, from the hourly level, you're heading lower in MACD. You're dropping in stochastic. You've actually closed below a minor support, below 43.97. So I would say argument here calls for further losses. Am I shorting euro? I guess that would be the question in people's minds. I'm not short in euro. I'm in other pairs right now. But I do consider euro as anything out there to argue a bounce in euro at this point. Okay, your latest data from the calendar, from the economic calendar, was poor. The reports that we're getting continue to focus on the problems that Greece is facing. What else? Your stock market is not exactly rallying. So to me, well, my preferred entry is really below that 50 fib at 4445, but this will also do. I will consider myself bearish under 4397. I will be looking for a test of this congestion lows around 4363, 4364. I will think myself as having a good support at 4340. So I won't be cocky and expect a big sell-off, but I would be looking for a test of that 4340 area. As far as on, it would be best, of course, if you're coming from just under. I've been talking about break of 4340. Look for a rally towards 45. That was before we heard about this more problems in Greece. That was before we saw weakness in the latest PMI data, and that's before our stock market started to drop again. So let's take a look at something else. What else do we find interesting in our chart? We have actually seen an even bigger sell-off in cable today. Now, I don't particularly suggest that people take the sell side of this, but I want to examine that cable chart. For GBP USD, let me start from the big picture. So, from the daily level, what are we getting? We have had indecisive trading in the daily charts, a lot of spinning tops. We now have our daily stochastic coming out of overbought territory. Your MACD is still rising, but I think our focus has stochastic dropping, us coming out of our congestion. Now, again, numbers that came out of the UK were poor. Your SIPS manufacturing index. For our charts, you have a bearish MACD. You're looking for a new bear cost and stochastic. You actually have an awkward looking head and shoulder. This is actually what I want to have, this head and shoulder pattern in the hourly level. Looks like it's now a pattern of this. Well, this is the kind of head and shoulder pattern that you do not want to take on a breakout. Normally we say head and shoulders are good reversal patterns. Normally we say you should be selling on a head and shoulder. But I want you to focus on the neckline. If you look at our head and shoulder, if you look at your hourly chart, what is happening with the neckline? The neckline is going against the direction of the preceding trend. We were in an uptrend. We saw a head and shoulder develop, and when we drew our neckline, it turns out that the neckline was sloping down. Because of this, we tend to say you want to be careful in taking a head and shoulder breakout for pattern. Why? Well, if your head and shoulders has a neckline that's going against the primary trend, against the preceding trend, more than likely you end up with false breakouts. It takes a while before a real sell-off happens. The trouble with this kind of head and shoulder is by the time you get to your neckline coming from the high of your right shoulder, you have spent a lot of money trying to push prices lower. You have spent a lot of effort trying to get prices lower, that sometimes market is already exhausted by the time it reaches the neckline. Maybe for a minute or two you push below the neckline, but you have trouble in holding under the neckline because of the effort to get there from the right shoulder high. So I just wanted to point this out. If ever you're considering, you might want to lay off on those where your neckline is going against the direction of the preceding trend. Had that neckline been pushing up, at that point I would say you see a breakout, jump in, try to chase it, because we wouldn't have expended too much effort to trigger again. We don't want to have a head and shoulder where the neckline is want the neckline to go in its direction. When you have head and shoulder patterns where the neckline is against it, up having trouble with the breakout, you end up getting false breakouts. Although I have to admit that I'm still bearish in GU, we still have a lot of reasons to expect that eventually a follow-through sell-off will happen. Guys, for now, what shall we do? I'm actually bearish in GU. I would prefer shorts from the breakout point at 64.57. That way there's room until you see the neckline. Another option for me is you give me another crack at pushing below that neckline. Give me an hourly close below it. And because we're bearish in our 4-hour indicators, we have this bearish divergence in MACDs and stochastics. You look at the hourlies and you also find yourself dropping in MACD, trouble going to oversold territory, I would remain bearish. Ghana, I would expect that over the next 12 hours, I'd be looking for a push all the way down here. So, rather, a not so ideal head and shoulder this may be. Still, the pattern target at a breakout is your 63.18 area. Get the pattern target, you get the distance between the high line projected at the breakout point. And that, if you're not short right now, if you're planning on shorting at the breakout, I would say target would be your 63.18 price point. Shorting from 64.57, I would say partial profits at the neckline, and then see if with the rest towards 63.18 minor support level. Folks, if there's any chart that you'd like us to go into, feel free to tell me about it. For now, let's take a look at Euro Yen. I was hoping that we will get a sell-off in USD JPY. Hey Janko, nope, we haven't done that yet. Let me finish Euro Yen and we'll do it. We'll go dollar CAD after Euro Yen. So why do I want to do something in Euro Yen? Yeah, I know. I actually have something not in USD NZD itself, both Kiwi as well. So guys, what do we have for Euro Yen? We have seen a big rally. We saw a symmetric triangle breakout. We have daily MACDs pushing up, daily stochastics pushing up. Throughout the trading day, we have had a limited range. Okay, so what do we know at this point? Euro is easing off. We have a risk-averse environment. Earlier, I was starting to see the beginnings of a potential sell-off in dollar yen, but it didn't amount to anything. It ended up in a congestion. I would like to point out, though, that this would be an ideal situation for us. If your euro continues to drop. And then we see that USD JPY also drops. At that point, it would be a good idea for you to focus your attention on euro yen. You have seen little price action so far today. If dollar yen drops along with the bearish euro, I would expect that you're going to see nice sell-off in EUR JPY itself. So let's take a look at this intraday. Instead, we've been in a congestion. From the 4-hour charts, we have a topping off in MACD. Our stochastic is dropping. We do know, however, that the stock market is weak. We do know that the data that we have been getting is poor. And we still have an unresolved issue as far as Greece is concerned. What else do we see in this chart? I was actually arguing earlier in our you have this. You have a multiple top situation. Okay, so you have a minor support area at 1703. I would down in the hourlies, although following your long tail in the previous hourly candle, your stochastic is bottoming out. Your stochastic is at risk at crossing higher. So what am I saying, guys? Maybe right now would not be such a good idea to take action. However, considering the tight ranges that we have seen, considering the weaker stock market that we are getting, should you find yourself in this situation? Let me get back to overview. Should you see that from the broader market, USD JPY is dropping and EUR USD is dropping, I would choose to focus on this EUR JPY. You will likely get a bigger move. You will likely get more pips on an EUR JPY sell-off if Euro and USD JPY are both dropping at the same time. Okay, so no immediate shorts, but something to watch out for. The possibility of a big sell-off in Euro Yen. Of course, keep your ears open. Listen to news. Anything that talks about Greece not getting money will be an argument for a weaker euro. All right, let's take a look at dollar CAD. Janko, target for GU? Well, Ghana, it's difficult to access videos on my site. Let's talk about it after the class. Just email me what. As far as GU is concerned, over the next 24 hours, I'd be looking for a push towards 63.18, head and shoulder target. If you're short from 64.57, I would be satisfied with merely getting 63.80. Where exactly you were coming from. But if you're looking to trigger the pattern, likely you will get 63.18 as your target. We saw a sharp sell-off in USD CAD yesterday. Forgive me, I don't really follow Canadian releases that much anymore. No sound. Okay, yeah, let me do that. Alright guys, hopefully this is working better now. So, what are we seeing here? From the 4-hour picture, we have a confluence of bears. If we go to the hourly level, we have a bearish stochastic, but we've been stuck in this congestion in dollar CAD. So I guess we have to work with that congestion. So I will give myself an immediate support. Thanks mode. I'll give myself an immediate support at 96.69. I would look for a break of that area as an excuse for further losses. Signal wise, as we said, we do have our hourly level bearish. We are below daily EMA lines. 4-hour charts technically bearish as well in the indicator. Question of when can I have an hourly close below that 96.69 area, and if given such an hourly close, what would be our target? I think immediate objective would be around this support level, around your 96.40 threshold. If your commodity markets continue to rally, well, if commodity markets continue to rally, I'd look for USD CAD to eventually ease off all the way down to your 96 area. Okay, so we are now starting to look bearish in dollar CAD. There's not much reason to expect a strong US dollar at this point. And with good commodity market performance, we should see our USD. The only problem for USD CAD is we end up with very small ranges that it's not worth trading unless you have very tight spreads. Nathan, I am not quite sure what you mean by short-term spreads. Oh, if you're trading short-term, will the spread affect the results? If that's what you mean, yep. You know, if you're an intraday trader, if you're a scalper, spread certainly is a big issue for you. I know people who don't mind spreads, but mostly they're term traders, they're overnight traders. Scalping. All right, folks. Where to? Somebody said that USD or rather USD NZD was at NZD USD was at a historical high. Yep, NZD USD is at a historical high. So why am I talking about AUD NZD? Let's put it this way. Part of the surge that you have had in NZD USD led to a sell-off in your AUD NZD. While we're not coming from historical lows in AUD NZD, we do find that there's such a big gap now between your EMA lines and the actual prices. Okay? Now, we call those lines as moving averages. Whether it's simple moving average, exponential moving average, or the weighted moving average, the fact is, we normally would expect that prices at some point would go back to those EMA lines, to those averages. So what am I suggesting? I'm suggesting that our AUD and ZD is well below its moving average lines. Call it an excursion from the mean. You find your daily stochastic crossing higher. You find yourself developing a turn in the daily candles. Of course, we don't know where our close will be, but I tend to think this will be a pursing pattern. Now, you move to the lower time frames, and what do we have? For our picture, you have a confluence of buys. MACD is up, stochastic is rising. You saw this big spike earlier following your GDP data. Very evident in the 4-hour charts, but you're also developing a cup and handle pattern. So 4-hour indicators are pushing higher. We are back above what was a good, strong support level before in AUD and ZD. Your 1.3017 region. Now, go to the hourly level, and we have this. You're bullish in MACD, and you have this cup and handle pattern forming. As an entry. But given that 3017 was a previous strong daily support level, I think that we should be thinking of this as a nice bounce off point already, with tight stops below that 3017 area. I would say 1.3 itself would be and focus on, for now, pushing back towards 3078. Try to take out 3078. We said that cup and handle patterns are reversal patterns. They are trend reversal patterns. So, big picture here, I'm actually thinking with your cup and handle, we should be thinking about following a break of 3078, getting to rally towards your 3190 region. One more thing about AUD and ZD. If you stay in the long side of AUD and ZD, you have positive swaps. So guys, we like buying AUD and ZD. Would certainly want to see the rally in AUD and ZD, a break of 3078, a push all the way up to your 3190 area. Nice thing about this, well, at least nice thing for me earlier, get a good risk reward from just above 3017, a stop loss at 1.3 psychological. So limited downside, and your upside towards the initial target, you have 1:1 risk reward now. Towards your actual objective, you're talking about multiples. You're talking about a 4:1 risk reward. So something to consider, this bottoming out. Of course, this is not going to be a risk-free. You have a rally in your Kiwi, and Kiwi is once again just below its latest historical highs. You know, the nice thing about this though, if you look at previous times that Kiwi was hitting historical highs, they were eventually followed by a quick big sell-off in a matter of. But I'm thinking this is a new historical high. Maybe we get one quick big sell-off forward. All right, guys. Any questions? Any chart that you'd like us to go into? Looks like Aussie is rallying once more. Let me just check Aussie. Okay. Looking at commodity markets, we've actually been excuse me. We've actually been stuck in a congestion, but for the moment we are coming off the lows of that congestion. So what does that mean? As we come off the lows of your commodity market congestion in gold, in silver, in oil, that should have a bullish impact for us in AUD/USD itself. Again, any strengthening of commodities will have a positive impact for the Australian and Canadian dollar. Now, what do we see in AUD and ZD, guys? I was actually hoping that we get to pull back towards our descending wedge breakout. Are once again pushing back up. Daily charts, we have a bullish MACD. We're overbought in stochastic. We are bouncing off the EMA lines. However, there's an argument that says go ahead, try to chase it, look for more buys. For our picture, you do have a new confluence of buys between MACDs and stochastics. Stochastic overbought. You're facing resistances at the 107.56 area. You want to play this safely. Maybe you wait for a break of that 107.56 region before doing something. But again, we're bullish and we're thinking, can we rally up towards your 108.08 region? Maybe all the way up to 108.79. For now, let's just have limited expectations. It's not as if your commodities are jumping up by leaps and bounds. So for now, guys, I'm saying it would take a close above 107.56 to convince me that there's still something in Aussie that we can squeeze, that there's still something in Aussie that we can push higher at the moment. But jumping in now is a little too expensive. If you want, allow prices to push above 107.56 first. Allow prices to establish themselves above 107.56 before taking action. Questions? Watching video in FX Instructor or what? Swiss really to me is we look at it, we are in over. Problem, I guess, for most people is that this is now uncharted territory. We've never been around this area in dollar Swiss. Can we move lower? From the policy side, there's no reason why we cannot expect further losses. Can we expect further losses today? That could be something else. If you look at your chart, you've got a bearish stochastic topping off an MACD. You're approaching this 61.8. I guess at this point I should adjust my fib expansions given the higher pullback that we have seen over the last 12 hours. So I'm going to use that higher pullback point. immediate objective for me in dollar Swiss is your 84.22 area. Okay, so we have a bearish stochastic. We're topping off an MACD. We're looking at 84.22 as our immediate target. Not a good time recapture. Not a good time to short though. We are pretty close towards that support level. So what I would suggest is this. I don't want to take the sell side. Not this low, not this close towards our immediate support. So what I'd like to do is look for a pullback. If you're looking to trade immediately, then I would suggest that we wait for the close of European market. Look at the possibility of bouncing from 84.22. And if you see yourself just around 85.20, then at that point start thinking, can I short dollar Swiss again? One thing that we have to remember, the Swiss do not mind having a strong currency. It's so dropping and dropping and dropping. A stronger currency also helps Switzerland in controlling its inflation. So we're bearish, but this is too close towards the immediate target. Other support areas, you have 83.46 and then 82.22. Now, we used to say that when you're working uncharted territory, expect a time circumstances are different. People are used to thinking of Swiss franc as being close for dollar Swiss. Questions, anyone? Otherwise, I'll just thank you folks for joining this class. I again apologize and good luck going forward.